Given the price history and forecast for Bitcoin, a cautious short-term strategy appears most appropriate. The recent price history shows volatility, with the price fluctuating around $62,000. Forecast suggests a potential dip towards $61,800 in the coming week. This indicates a possible short-term opportunity to capitalize on the predicted price decline. Therefore, a short-term strategy would involve entering a short position at $62,500, with a stop loss at $63,300 to limit potential losses if the price unexpectedly rises. The target price could be set at $61,700, aiming to profit from the predicted price drop. This strategy takes advantage of the short-term bearish outlook indicated by the price forecast while mitigating risk through a well-defined stop loss. Given the 2-week price change and the 1-week forecast for Ethereum, a cautious investment strategy focusing on a short-term perspective appears most suitable. The historical price data reveals a downward trend, with the recent price hovering near the support level of $2,297.29. The forecast predicts further declines, suggesting Ethereum could fall below $2,350. This bearish outlook, coupled with the proximity to the support level, indicates a potential for a short-term price reversal. Therefore, a short position is recommended to capitalize on the anticipated price decline. A suitable entry price would be around $2,420, aligning with the recent price action and the forecast. The stop loss should be set at $2,480 to mitigate potential losses if the price unexpectedly rises. The target price could be set at $2,290, aiming to capture a significant portion of the predicted decline. This strategy allows for a controlled risk-reward profile, taking advantage of the short-term bearish sentiment while minimizing potential losses. Based on the provided historical price data and the forecast for Solana, a cautious investment strategy is recommended. The historical prices show a recent downward trend, with the forecast indicating further declines in the coming week. Although the support price is at $125.16, the current price is already approaching this level. This suggests that there is a high probability of a further price drop. Therefore, a short position is advisable for a short-term investment strategy. An entry price of $142, aligning with the recent price action and the forecast, would be suitable. The stop loss should be set at $144 to limit potential losses if the price unexpectedly rises. The target price should be $137, aiming to capitalize on the anticipated decline towards the support level. This strategy allows for potential profit, while managing risk effectively in the current bearish market environment. Given the current price trends and the provided forecast for Ripple, conservative investment strategy would focus on a short-term approach. The historical prices show a fluctuating trend, with the price currently hovering near the support level of $0.5227. The forecast indicates a downward trajectory over the next week, suggesting a potential decline towards the support level. Therefore, a short position is recommended to capitalize on this anticipated price decrease. An entry price of $0.545, slightly above the current price, allows for a buffer against immediate price fluctuations. The stop loss should be set at $0.551, the lowest point in the forecast. To protect against unexpected upward movements, the target price should be set at $0.525, aiming to capture a portion of the potential decline towards the support level. This strategy aims to minimize risk while maximizing potential returns within a short time frame. Based on the provided data for Cardano, the current price is hovering around the support level of $0.342, suggesting a potential for a bounce back. The forecast price indicates a slight downward trend, but the decline is relatively modest. Considering the short-term outlook, a long position on Cardano seems more appealing. an entry price of $0.345 could be considered, allowing for a small buffer above the support level. The stop loss should be set at $0.342, just below the support, to minimize potential losses. The target price could be set at $0.36, aligning with the resistance level and allowing for a reasonable profit margin. This strategy capitalizes on the potential for a short-term rebound while managing risk effectively. Given the provided price history and forecast for SU, a medium-term investment strategy appears most suitable. The historical price data shows a general upward trend, with recent fluctuations suggesting consolidation. The forecast indicates continued growth, with prices potentially reaching $1.89 within the next week. This suggests a bullish outlook for SU in the medium term. To capitalize on this potential, I recommend a long position in SU. An entry price around $1.76, slightly below the current price, allows for some margin of safety while still benefiting from the upward momentum. The stop loss should be set at $1.68, the recent support level, to minimize potential losses. Target price could be set at $1.89, aligning with the highest projected price in the forecast. This strategy balances risk and reward, aiming to capture a significant portion of the potential price increase while mitigating downside exposure. Given the current price trends and forecast for Filecoin, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend over the past 2 weeks, and the forecast indicates further declines. This suggests a bearish outlook in the short term. However, the support price at $3.278 provides a potential floor for the price. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $3.65, aligning with the current price and the downward trend, would be suitable. The stop loss should be set at $3.72 to protect against any unexpected price recovery. The target price should be set at $3.56, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support. This strategy aims to minimize risk while maximizing potential returns within a short time frame. Given the price trends and forecast for ThetaNetwork, a short-term investment strategy appears most suitable. The historical price data reveals a fluctuating pattern, with recent fluctuations indicating potential volatility. The forecast suggests a continued downward trend in the coming week, reaching as low as $1.27. This bearish outlook aligns with historical price movement, and the current price being near the resistance level of $1.439. Therefore, an aggressive short-term investment strategy would involve opening a short position at the current market price, around $1.3, with a stop loss set at $1.39 to mitigate potential losses. Target price for this strategy would be $1.27, aligning with the forecasted lowest price. This approach aims to capitalize on the anticipated price decline within the short term, taking advantage of the bearish momentum indicated by both historical data and the price forecast. Based on the provided price information for Dogwifhat, a short-term investment strategy with a long position appears to be the most suitable approach. The historical prices show a consistent upward trend, with recent fluctuations near the support price of $2.048. The forecast prices suggest continued upward momentum, reaching up to $2.46 within the next week. This indicates a bullish outlook in the short term, making a long position potentially profitable. To execute this strategy, an entry price of $2.25 would be appropriate, allowing you to buy in at a price slightly below the current market value and capitalize on potential upward movement. The stop loss should be set at $2.15 to protect against unforeseen price drops, while the target price could be set at $2.40, aiming to secure profits before the price reaches its projected resistance level of $2.44. The provided data for Stellar suggests a bearish outlook for the short to medium term. The 2-week price change shows a downward trend, and the forecast indicates further declines. while the support price is at $0.0902, the resistance is at $0.0944, suggesting a limited potential for upward movement. Given this information, a short position on Stellar seems more suitable. For an aggressive short-term investment strategy, an entry price of $0.0938 could be considered, aligning with the current price and the forecasted decline. The stop loss should be placed at $0.0944, slightly above the current price and the resistance level, to protect against unexpected upward movements. The target price could be set at $0.0902, the support level, allowing for potential profits from the anticipated price decline. This strategy capitalizes on the bearish sentiment and aims to profit from the potential drop in Stellar's price. Based on the provided information for Starknet, a short-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend with recent declines, while the forecast predicts a slight upward movement but still below the current price. This suggests a potential for a short-term pullback. Therefore, an investment strategy involving a short position would be advisable. A suitable entry price could be around $0.387, aligning with the recent price action and the lower end of the forecast range. The stop loss should be set at $0.402, slightly above the entry price to minimize potential losses if the price unexpectedly rises. The target price could be set at $0.367, aiming to capitalize on the potential downward movement towards the support price. This strategy capitalizes on the anticipated short-term price correction while managing risk through a well-defined stop loss. Given the current price trends and forecast for Pendle, a cautious investment strategy with a short-term perspective appears suitable. The historical price data shows some volatility, with recent fluctuations around the $3.80 mark. The forecast indicates a potential upward movement in the coming week, but the magnitude of this increase is relatively modest. Considering this, a long position on Pendle could be considered. An entry price around $3.85 would allow you to buy in near the current price level and potentially benefit from the upward movement predicted by the forecast. A stop loss at $3.75 would help limit potential losses if the price declines unexpectedly. A target price of $4.15 would provide a reasonable profit target, aligning with the upper end of the forecast range. This strategy balances risk and reward, aiming to capitalize on the potential for short-term price appreciation while safeguarding against significant losses. Given the price trends and forecast for Render, a cautious investment strategy would focus on a short-term approach to capitalize on potential price fluctuations. The historical prices show a mixed trend with recent declines, and the forecast indicates a further downward movement. While the support price at $5.266 offers a potential floor, the resistance at $6.476 suggests limited upside potential. Therefore, a short position is advisable to potentially profit from the anticipated decline. An entry price of $5.75, slightly above the current price, would allow you to enter the position with room for price movement. A stop loss at $5.9, slightly above the entry price, would protect against unexpected price surges. The target price should be set at $5.2, aligning with the support price and offering a realistic profit potential. This strategy allows for a short-term investment horizon, capitalizing on the forecast while mitigating risk through a well-defined stop loss. Given the price trends and forecast for VeChain, a cautious investment strategy would focus on a short-term approach. The historical prices show a recent downward trend, with the current price close to its support level of $0.0209. The forecast suggests VeChain could continue to decline in the short term. In this scenario, a short position is advisable to capitalize on the potential for a price decrease. an aggressive short-term investment strategy could involve an entry price of $0.0226, aligning with the current price and the forecast. The stop loss should be set at $0.0237 to protect against any unexpected price recovery. The target price should be set at $0.0215, slightly above the forecasted lowest price, allowing you to take profits before the market potentially finds support. Based on the provided information about Binancecoin, a short-term investment strategy appears to be the most suitable approach. The historical price data shows a recent decline, and the forecast indicates further downward movement, while the support price sits at $559.9. Price is currently hovering close to the lower end of the recent range, suggesting potential for further decline. Therefore, a short position would be advisable. An entry price of $562 could be considered, aligning with the current price and the potential for a downward movement. To manage risk, a stop loss could be set at $570, allowing for a small margin of error. Target price could be set at $550, aiming to capture a potential decline towards the support level. This strategy capitalizes on the short-term bearish outlook for Binancecoin while implementing risk management measures to protect against unexpected price fluctuations. First, based on the provided price information, Conflux exhibits a fluctuating price trend with both upward and downward movements. Forecast prices suggest a continued upward trajectory over the next week. Considering the support price of $0.1587 and the resistance price of $0.1793, a long position appears to be a viable strategy. This strategy capitalizes on the potential for the price to rise towards the resistance level. Secondly, an aggressive short-term investment strategy could involve entering a long position at the current price, which is slightly below the forecast price. A stop-loss order could be set at $0.1587, the support price, to limit potential losses. The target price could be set at $0.1793, the resistance price, aiming to capture the full potential upside movement. This strategy takes advantage of the bullish forecast while managing risk through a defined stop-loss. The historical price data for Worldcoin reveals a volatile trend with both upward and downward movements. The current price is hovering near the support level of $1.595, indicating potential for a rebound. The forecast price suggests a gradual upward movement over the next week, reaching a peak around $1.97. Considering the price trends, forecast, and support level, a long position in Worldcoin appears to be a promising strategy. To execute this strategy, an entry price of $1.65 would be advisable, allowing for a small margin of safety above the current price. The stop loss should be set at $1.595, the support level, to minimize potential losses. The target price could be set at $1.90, capitalizing on the forecasted price increase while leaving room for market fluctuations. This strategy aims to capitalize on the potential for a short to medium term price appreciation in Worldcoin. Based on the provided Avalanche price data and forecast, a short-term bearish strategy appears most suitable. The 2-week price history demonstrates a fluctuating trend, with a slight downward bias. The forecast further suggests a continued decline in price over the next week, reaching as low as $25. Considering this bearish outlook, an entry price of $26 could be considered, allowing for a small margin above the current price. A stop loss should be placed at $27 to limit potential losses if the price unexpectedly rises. The target price could be set at $25, capitalizing on the predicted price decline. This short-term strategy aims to profit from the anticipated downward movement in Avalanche, with a focus on mitigating risk through a well-defined stop loss. Based on the provided data for Jupiter, the historical price shows a fluctuating trend with both upward and downward movements. The forecast price indicates a slight downward trend over the next week, suggesting a potential bearish outlook in the short term. Considering the support price at $0.7434 and the resistance price at $0.8691, there is a possibility for Jupiter to consolidate within this range in the coming days. Given the potential for a short-term decline, a short-term bearish strategy appears to be more suitable. An entry price of $0.805, slightly above the recent low, would allow for potential profit from a price drop towards the support level. A stop loss at $0.823, just above the entry price, would limit potential losses in case of an unexpected price reversal. The target price could be set at $0.766, which is near the recent low and aligns with the forecasted downward trend. This strategy allows for capitalizing on the potential short-term decline in Jupiter, while managing risk effectively. Based on the provided EOS data, the historical prices reveal a downward trend over the past 2 weeks. The forecast further suggests a continued decline in the coming week, with prices potentially falling below the current support level. This bearish outlook indicates a suitable opportunity for a short-term investment strategy. Therefore, I recommend taking a short position on EOS. An aggressive entry price could be around $0.475, aligning with the forecasted price. To manage risk, set a stop-loss order at $0.4912, slightly above the current resistance level. This would limit potential losses if the price unexpectedly moves upwards. The target price for this short position should be $0.465, the support level, aiming to capitalize on the anticipated price decline. This strategy capitalizes on the short-term bearish momentum in EOS while implementing risk management measures to protect potential losses. Based on the provided historical price data and the 1-week price forecast for TRON, a short-term investment strategy appears to be the most suitable approach. The historical prices indicate a recent upward trend, with TRON fluctuating around $0.15. The forecast suggests a slight dip in the coming week, with prices potentially falling to $0.15. This presents an opportunity to capitalize on the anticipated decline. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current market price, which is close to $0.155. A stop-loss order should be placed at $0.1577, slightly above the current price, to limit potential losses. The target price could be set at $0.15, aiming to profit from the predicted price drop. This strategy leverages the short-term price fluctuations and the forecast indicating a slight downward movement in TRON. Based on the provided historical price data and forecast for VeChain, a short-term investment strategy appears most suitable. The recent price history demonstrates volatility with a slight upward trend. However, the forecast suggests a consolidation period with prices hovering around the current levels. Considering the support price at $0.3966 and resistance at $0.4332, a cautious approach is recommended. Therefore, an investment strategy for VeChain would involve taking a long position with an entry price around $0.415, aiming to capitalize on potential upward momentum within the consolidation phase. The stop loss should be set at $0.398 to limit potential losses if the price drops below the support level. The target price could be set at $0.43, aiming to capture a moderate profit before encountering resistance. This strategy balances risk and reward, allowing for potential gains while mitigating potential losses in the short term. Given the price trends and forecast for ShibaInu, a medium-term investment strategy appears most suitable. The historical prices show a slight downward trend in recent weeks, but the forecast suggests a potential reversal and upward movement in the coming week. The current price is close to the support level of $0.0000161, indicating a potential buying opportunity. The resistance level of $0.0000177 suggests there is room for price appreciation. Therefore, a long position is recommended for a medium-term investment horizon. A suitable entry price would be around $0.0000165, aligning with the recent price action. and providing a margin of safety below the support level. The stop loss should be set at $0.00000161, protecting against further downside movement. The target price could be set at $0.00000181, aligning with the first forecast price, aiming to capitalize on the potential upward momentum. This strategy allows for a balance between risk and reward, taking advantage of the potential for price appreciation while managing potential losses. Given the price trends and forecast for Dogecoin, a cautious investment strategy would focus on a short-term approach. While the historical prices show some upward momentum, the recent price action suggests a potential pullback. The forecast indicates a slight decrease in the coming week, with prices hovering around the support level. Therefore, a short position is advisable to capitalize on the anticipated decline. An entry price of $0.109 could be considered, aligning with the current price and the forecast. The stop loss should be set at $0.114 to protect against any unexpected price surge. The target price could be set at $0.105, allowing you to take profits before the price reaches the strong support level. This strategy allows for potential gains in the short term, while mitigating risks associated with a volatile asset like Dogecoin. HookedProtocol's recent price history suggests a period of consolidation, with a slight downward trend. The forecast indicates a continuation of this trend, with prices expected to remain relatively stable around the $0.44 mark. Given the limited upward potential and the potential for further declines, a short-term bearish strategy appears more suitable. An entry price around $0.435 would allow you to capitalize on any further downward movement. A stop loss at $0.4517, slightly above the current resistance level, would protect your investment from unexpected price surges. A target price of $0.408, aligning with the recent lows and the support level, would provide a reasonable profit opportunity. This strategy focuses on capturing short-term price fluctuations within a sideways market, aiming to profit from the anticipated downward pressure. Based on the provided information for Aevo, a short-term investment strategy appears most suitable. The historical price data demonstrates volatility, with recent fluctuations suggesting a potential for short-term price movements. The forecast price indicates a downward trend over the next week, aligning with the bearish sentiment implied by the recent price action. This suggests that a short position could be profitable in the short term. To implement this strategy, an entry price of $0.345 would be appropriate, slightly above the current price and below the recent high. A stop-loss order should be placed at $0.36, safeguarding against potential upward price movements. The target price would be set at $0.32, aiming to capture potential downward momentum towards the support level. This strategy capitalizes on the anticipated short-term decline in Aevo's price, aiming to generate profits within a week. Given the price trends and forecast for Notcoin, a short-term investment strategy seems appropriate. The historical prices demonstrate a fluctuating pattern with a recent downward trend. The forecast suggests a further decline in price, with the lowest predicted price being $0.00715. The support price of $0.00715 aligns with this forecast, indicating a potential floor for the price. Therefore, a short position is recommended. An aggressive entry price could be around $0.00753, allowing for a potential profit as the price moves towards the forecast lows. A stop loss should be placed at $0.00773 to limit potential losses if the price unexpectedly rises. A target price of $0.00715 would allow for a profit before reaching the predicted support level. This strategy capitalizes on the short-term bearish outlook for Notcoin. Based on the provided Suncoin price history and forecast, a cautious short-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend with a downward bias over the past 2 weeks. The forecast further suggests a continued decline in price over the next week, with potential drops below the current levels. Given this bearish outlook, a short position on Suncoin is recommended, an entry price of $0.0209, aligning with the recent price dip, would allow for capitalizing on the potential downward movement. A stop loss at $0.0225, slightly above the recent high, would help mitigate risk in case of an unexpected price surge. The target price should be set at $0.0167, the identified support level, aiming to capture a significant portion of the potential price decline. This strategy prioritizes risk management and capital preservation, while seeking to profit from the anticipated downward trend in Suncoin. Pepecoin, as price history demonstrates a fluctuating trend, with recent fluctuations indicating a potential for short-term volatility. The forecast suggests a slight upward movement in the coming week, reaching prices around $0.00000995. However, price remains close to its support level of $0.00000917, indicating a possibility of further decline. Considering this uncertainty, a short-term investment strategy with a cautious approach appears most suitable. A long position is not recommended at this time due to the volatile nature of the asset and the proximity to the support level. Instead, a short position could be considered with an entry price around $0.00000950, aligning with the current price and the potential for a slight decline. A stop-loss order should be placed at $0.00000973 to limit potential losses if the price unexpectedly rises. The target price could be set at $0.00000917, aiming to capitalize on a potential drop to the support level. This strategy allows for potential profits from a short-term price decline while mitigating risk through a well-defined stop-loss order.